Hey there, welcome back to my final episode of Making Sense of Your Market for 2022. This has been a year that I believe what I do outside of originating mortgages, creating content like this on a weekly basis and creating these videos on social media or YouTube or sending them out to you via email, like you might be seeing right now, has shown to be more valuable than ever. In an economy that we're in right now, where there's economic news every single day that impacts the financial decisions that you make, whether it's buying a home or buying a car or buying groceries, it's really important to kind of have someone or have some sort of understanding or a means to get information that helps you kind of see through the fog. And I've been using this analogy this year that we are in somewhat of, I don't want to say a storm. I don't think we're in a storm yet, but it's really foggy out. I spend a lot of time in my spare time out in the Puget Sound fishing. And oftentimes we'll go out at 4 or 5 in the morning when it's dark or the sun is coming up and the moon's still out and we can see where we're going. But then the fog rolls in. We can't see where we're going. And we have to rely on our GPS. We have to rely on our electronics. Pilots in aircraft use electronics. They have to rely on it. People that are out on commercial fishing vessels and commercial boats have to rely on their electronics in the dark and in the fog. And what I wanted to do with today's 4 or 5 minute episode is kind of be your GPS for economics. And this is all data, no opinion. All right. So I spent some time over the last week. I attended the National Association of Realtors. This is the number one lobbying group in America for housing. I attended their real estate forecast summit. It was virtual still. And learned a ton. And I'm going to share in a 2-hour webinar 2 or 3 tips in 2 or 3 minutes that are really going to help you better understand what's going to go on with housing next year. And then I'm going to share what Fannie Mae, the number one insurer of mortgages in America, billion-dollar company, their predictions with data in regards to what mortgage rates are going to do next year, because mortgage rates will impact housing. And I'm going to talk about a couple of economic things. And I promise you, at the end of this video today, you're going to find 1 or 2 things that are going to help you see more clearly economically and financially in 2023. Whether you own a home and you're just worried about maybe your home value is declining, or you think in the next year or 2 you might be needing to sell and move, or if you're a first-time home buyer and you're thinking about making one of the largest financial decisions of your life, you're going to be able to rely on this information. And really, that's what I do secondarily to my primary job, which is mortgage advisor, helping people get approved and go through the mortgage financing process to finance real estate. So let's jump in. I want to start with one of the first slides, and I'm going to actually give the link to all the slides. So if you're watching this on YouTube, down in the description, you're going to see a link to the National Association of Realtors Forecast Summit. So you can see all the slides. You can actually even listen to it if you'd like. But one of the initial slides they talked about was, and I'm going to read this, it's the lock-in effect for 2023. Fannie Mae's talked about this. National Association of Realtors have talked about this. But the financial disincentive, the lock-in effect means it explains the financial disincentive for existing homeowners to sell or move in 2023 or to take on a new mortgage. This will remain at a level that we have not seen in America in over 40 years, meaning, this is what that means, 40% of all homes that are owned in America, 40% of them are free and clear. They have no mortgage. That's crazy. Now, of the 60% of homes owned in America that have a mortgage, approximately 84% of those have mortgages under 4.5% with a 30-year fixed. So when I talk about a disincentive to move or to sell, they own their home free and clear. And if they don't own their home free and clear, they already have a really good mortgage. So there's really no need. Now, back in 2020, when rates were really low, you could say, hey, this house is nice, but because rates are low, we can go buy this house and maybe buy $300,000 more of a house for the same price. It's an incentive. There really are no incentives. So what that's going to do, this is the good news, the silver lining in this, real estate agents or people thinking that they need to make a move in the next 2 years, is that's going to build up the excitement or the need or the demand for people to sell or move in the next couple of years. So there's good news there. So the other thing is, I think that that is going to keep home values. It's going to help preserve home values. Okay, because there's going to be less inventory. So when buyers are out there making a buying decision, they have less homes to choose from. More buyers wanting to buy a particular home may continue to help hold up or drive up prices. All right, so that was the first thing that I learned from this, which I thought it wasn't anything surprising, but I think it's worth mentioning to you. Do you want to bring up the other thing that is probably the big elephant in the room, right? Is home values. What are they going to do in 2023? So Q1 prediction is they'll be up, and this is nationally, not just Seattle. This is nationally. Seattle's a little bit more healthy in certain markets. Nationally, home values will be up 3.3% in Q1 of next year. However, in Q2, down 1.3%. In Q3, down 1.4%. In Q4, down 1.5%. So all in all, that's not a bad thing. If you look at where home values are right now, they're really not going to make a huge move up or a huge drop down. Now, there are some outlying cities. There's some outliers that may impact this, but that is really good news. This is from the National Association of Realtors. The other thing, Fannie Mae. Let's go back to Fannie Mae. Fannie Mae talks about mortgage interest rates, okay? And I believe that mortgage interest rates, one, are tied to inflation levels. We just saw this week. Inflation's down 2 months in a row, year over year. We saw mortgage rates come down with that. So all of these charts and graphs that I've been sharing for the last 3 or 4 months, that mortgage rates are attached to inflation, it's true. We're seeing rates come down as inflation comes down. So as we continue to see that, that's great news for mortgage rates. Fannie Mae, Berkshire Hathaway, Citicorp are all predicting by Q3 of next year that mortgage rates will be down into the 5s, possibly into the 4s. So that's really good news for first-time homebuyers right now. You have an opportunity to buy right now. Rates are a little bit higher, but then you can refinance, lower your interest rate next year when rates do drop, or in 2024, worst case scenario. Now, there's some great loan programs out there right now, like the 2-1 buy down or the 3-2-1 buy down, that assist and they help you with that. Reach out to me for more information on that. But I want to close with this. I think it's so important as a past client of mine, current client of mine, or potential future client of mine that you understand a couple of things about the market. The market is cyclical and the market is seasonal. And we have to understand right now, we're going through a season right now. We're going through a downtime in the real estate market. But every February and March, you can look at stats year over year, good markets or bad markets, home sales increase February, March, right there in the spring. So seasonal and cyclical. The other thing about that cycle is we are going through a cycle. We're going back to a normal real estate cycle, pre-COVID, pre-low interest rate cycle. This is good news. This is not sky is falling news, okay? So I wanted to share this information with you. There's nothing here that worries me about the housing market or the economy in 2023. Let's go back to the fundamentals, though. Make sure you're managing your money right, your budget, that you're budgeting what's coming in, what's going out every single month, and what you have left over, and being smart with increasing the amount of money that you have left over every single month. So be smart with your money. If you want to learn more about that, I teach this every single month. You can go to budgetwithdan.com. I've provided so much free information there where if you want to learn more about budgeting, if you want to master budgeting, if you want to start investing, if you want to take a 15-question test on your money, it's all there, and it's all there for you so that I can help you through, not only through your journey of homeownership, but to help you come out the other side of homeownership in a better financial position as a result of our relationship, me being your mortgage guy. So, hey, as we head into the holidays, I want to wish you a Merry Christmas. I want to wish you a Happy New Year. And I want to let you know that I'm here if you have any questions. You can't email me, text me, or call me too much. I love getting calls from you.